Now, I'm in a good mood. I just got back from Mexico yesterday. Every time I refresh my browser into my stock portfolios, my uranium stock just went higher and higher and higher and higher. And I was on vacation in Mexico. And this is really starting to get quite historic as billionaire Eric Sprott's company is stepping into the market in an absolutely major way. We've seen the price of uranium go from $30 a pound to 50. I was talking to a friend recently and I said, name me one other industry in the entire world that is this needed, but is in a supply deficit. 200 million pounds used annually a year and only increasing. They're only mining about 130 million. And what other market is so illiquid that a multi-billion dollar natural resource investment legend can step in and create a trust to buy all the uranium out of the market? They're in a 70 million supply deficit and they can step in and do that. This is historically exciting. And today, to discuss this subject, we have my good friend, Justin from Uranium Insider. Now, I want you to know I'm a paying member to Uranium Insider. I highly recommend you do this. This has made me a lot of money so far, and this is only the beginning. And I always see these comments of everyone so stoked. So please, right now, right there down below in the description and pinned to the comments, go ahead and sign up to Uranium Insider right there down below. I myself am a paying member. And I highly suggest that we all get in before the hedge funds really start having some fun in this market. I think it's going to be absolutely legendary. So without further ado, make sure you hit the like button on this video. Send it out into the YouTube universe. Comment down below, go Uranium Go, right there down below. Comment down below, go Uranium Go. Sign up to the link pinned to the comments and in the description right there down below. And it's good to see you.
Good to see you too, Jake.
How's my intro?
Fantastic. It's funny. You reminded me, your experience that you just had in Mexico was the precise opposite of my business partner's experience last year. He was in Mexico. He was in Cabo when the precious metals were crashing. Do you remember when silver crashed down to like, what was it, less than $10 or something, wasn't it? And he kept refreshing and pulling his hair out, just like could not believe what he was seeing. So I'm happy to see that you had an experience opposite that.
Yeah, I had quite the trip, and I certainly paid for it 10 times over with that movement in uranium. It's pretty exciting. So give us an update on everything taking place right now. Obviously, like I've said before, with the market looking this incredible, I'd like to have you on more often, and I want to help as many people. You know, there's always going to be the people that still aren't going to sign up for Uranium Insider. But for those that are keen, give us an idea what's going on right now.
Sure. Yeah, it's been a couple of weeks since we caught up. So right now we're seeing what looks, in my opinion, to be a pretty healthy correction coming off of a pretty overbought conditions in most of the stocks in the space that came on the heels of, like you mentioned, incredible moves in the spot price. We saw the spot price up by 50% in 4 weeks with only 10 million pounds. Well, when I say only, that's pretty incredible that Sprott Physical Uranium Trust purchased 10 million pounds in 4 weeks. But to note that the movement of the spot price was what it was based on only 10 million pounds was pretty noteworthy. I mean, we're really talking about a highly, highly illiquid market when it comes to the physical uranium that's sitting above ground presently, available for sale. And we saw just exactly what happened when that amount of uranium was purchased by by not necessarily an end user, but by an entity who is not intending to trade that uranium. This is not a trader. This is not a carry trader. The Sprott is accumulating the uranium for the purpose of holding it. Period. So they are they aren't concerned with the price they're paying for that uranium. Let's just say. So I think that a lot of the sellers over the past month are taking advantage of that and raising their prices, day over day when they were heavily into the market. So last Friday, we saw a pretty big sell-off in the space coming off kind of not really a blow off top, but most of the equities in the space were, more than 2x the 200-day moving average, which in my book is starting to get parabolic anytime. And sentiment was super euphoric. And anytime you have that in the resource space, all you need is one little something, an excuse for retail to kind of panic and take profits. And that's exactly what we had. So on Friday, we saw an article come out of Bloomberg that mentioned that Kazatomprom had been talking with Sprott about selling them pounds in 2022. And the retail market didn't really like that. They sold it off. But we saw heavier volumes of selling in the ETFs and in the Sprott Physical Uranium Trust as well, U.UN. And so, in my opinion, kind of what we're seeing right now is basically, obviously, some profit taking, but also I think there's some smart money trying to cool things off a little bit here. And that seems to be short-lived because we're already seemingly kind of finding a balance point here in the equities. Volume is diminishing, and the sellers seem to be kind of getting exhausted. So we had two big down days, Friday and Monday. Yesterday and today, Tuesday, Wednesday, look like they're kind of stabilizing a bit. And my portfolio has been in the green the past 2 days. That's mostly uranium. We actually saw the metals even in the green today, which is refreshing. But so yeah, it seems like everybody's trying to just kind of figure out what's going on here. Nobody expected, Sprott included, that the price would move that fast based on that volume. So the investing community, the uranium traders, the nuclear participants in the nuclear fuel market, utilities, fuel buyers, etc. I think everybody's trying to figure things out here and where we go from here. In my opinion, where we go from here is higher. I wouldn't be surprised if we base here for maybe another week, maybe two, if we're lucky. And then we're going to find ourselves in right into uranium seasonality. So October 1st is the beginning of the fiscal year for the US utilities. You have multiple uranium-related, nuclear fuel-related conferences in the next couple of months globally. And you have a typically strong season that investors are fully aware of for uranium that goes usually October through December. Sometimes it'll trickle into January, February. That's what I think is coming. I had another point, but I lost it.
Okay, so let's go here. First of all, let me say I've been telling everyone about uranium. Since the start of the year, I've doubled my mother-in-law's retirement account. Especially been nice the last few weeks. So she's very excited as well. And I've been telling everyone about it. And it's just an incredible story. And so for someone that isn't a uranium junkie, let's kind of break down the significance of this. When I come on the intro and I say, look, please sign up for Uranium Insider, I'm a paying member, someone might go, but let's really break this down why we're so excited. First of all, if you're still listening to this and you haven't yet, right there down below, pinned to the top comment and in the description right there down below is a link to sign up to Uranium Insider. It's the best newsletter in the uranium sector, breaking down the macro to the micro, what stocks to buy, what to sell, what to look for. It's a very, very, very good newsletter, and it's very cheap for the returns that you're going to get. I highly recommend that you sign up to that right now and do yourself a favor. The link's right there. Now let's start here, Justin. So you said that Sprott has bought about 10 million. So for those that, let's just, for the general audience, I know some uranium junkies will get mad in the comments, but so Eric Sprott, legendary multi-billion-dollar natural resource investor, his company came in. They have a trust that basically allows them to issue shares and turn around and buy uranium up to $1.3 billion worth on this first ATM. The market has 200 million pounds that are used globally a year for electricity and such. They're only mining about 130, so that's a 70 million pound supply deficit. They bought 10 million pounds, so the math on that per the annual supply is about 7% of the annual supply that they bought in 4 weeks. Let's break down the significance of this for someone that is not yet involved in uranium.
Sure. Yeah. So the CEO of Sprott, his name is John Ciampaglia. He's an extremely sharp person. He's been working on this deal to take over UPC for almost 3 years, and so they've had a long-term vision for the creation of this vehicle. That's the first thing to keep in mind, is they saw the opportunity back when we saw the opportunity, multiple years ago, and have now finally come to the table. Their initial ATM was 300 million, and they went through that in less than a month, and they upped it by another billion. So their total ATM now 1.3 billion. I don't have the number right in front of me, but I believe they've raised somewhere around 450 million since the ATM launch, which was August 17th. So a bit over 4 weeks, about 4.5 weeks. And the significance of a buyer that's able to, that's a buyer that is financially driven. They're not somebody that is driven by, producing nuclear energy. That's the first thing to keep in mind. And there's certainly memories of the previous bull market where we had a different setup. We had different catalysts. The big catalyst was Cigar Lake mine flooded as they were developing it. MacArthur River flooded. So they had multiple catalysts that scared the utilities and scared the traders into thinking there was about to be a supply shortage. But you also had hedge funds coming into the space, including UPC, buying physical uranium and squeezing that market, which is what really ultimately resulted in that $134 a pound price, was the financial players. So Sprott now, with they've got 18 billion under management, they got 13 billion in their physical trusts, and they know what they're doing. They have a deep marketing department. They have a clear goal, which is to accumulate uranium. And the way that their ATM works is whenever they're trading at greater than a 1% premium to NAV is when they can issue shares into the market. And they intend to not be more than 50 to 60% of the daily volume, the daily trading volume on any given day, that they're more than 1% to premium to NAV. So if they're trading below 1% premium to NAV, they're not issuing shares. So it's not like they can just do it whenever. I mean, technically they could, but it would be diluted to shareholders, and they haven't, and they're unlikely to do that. So it really depends on the funds flowing into that vehicle. So we've seen that pull back a little bit the past few days, and we've seen them issue fewer shares. They bought 600,000 pounds on Friday and another 400 on Monday and 100 yesterday. So they've still been buying with the cash that they had raised from their share issuance the previous week. But to put it all in perspective, well, first of all, that buying volume, like I said, depends on the funds flow. And the crazy amount of funds are not going to flow into this thing every single day, day over day, right? And we've seen that. It's going to be cyclical like everything else. But when the funds flow into it and there's enough volume that they can issue abundant shares and raise cash to buy uranium, that's just what they're going to do. And there's nothing really to stop them. There's nothing regulatory. There's no reason for them not to when the funds are flowing into it. And the volumes that we've seen so far are pretty incredible. So 10 million pounds in 4 weeks. I think it would be irresponsible to extrapolate that on an annual basis, because they're not going to purchase that much. And as the price rises, they can purchase less with the same amount of cash raised, obviously with the higher price of the pounds. But still, that's, like you said, 7% of what's going to be produced this year. It's absolutely huge. You can take the most recent WNA fuel report, which was just released a couple of weeks ago, and it shows a quasi-balanced market a few years out, followed by a long-term supply deficit once you get 2025 and go and onward. And the way that this market works is utilities typically will secure pounds out into the future via long-term contracts. And there's a lot of uncovered utilities going out into that time frame, but the utilities have been able to buy uranium cheaply and abundantly for a very long time. So the term contract volume has diminished substantially since the previous decades. So if you look at that chart, what you'll see, I should probably bring it up if I can. What you'll see is you can take the secondary supply. So there's the bars that show the supply on the bottom side. Let me see if I can dig that up, Jake, really quick. Okay, so let's take a look at this. This is the fuel report, nuclear fuel report that was released by the WNA a couple of weeks ago. If you look at the lower part of these supply bars, you're looking at this light blue area that looks to be roughly about 10,000, excuse me, yeah, 10,000 tons of uranium. That's 26 million pounds. Okay. So Sprott just purchased 10 million pounds of uranium. So if you're looking at this chart and you're looking at 2023, 2024, 2025, and you see how much that supply is bolstered by that secondary supply, right? That light blue at the bottom. If they just purchase 10 million pounds a month, I think it's safe to say that they will purchase multiples of that on an annual basis, right? Let's say at least twice that. You can basically take that light blue bar and remove it for the next 5 years. That's what we're looking at. That's what we're looking at for uranium and the significance of Sprott.
But wouldn't it be more than that if that's 10 million, but you said they could buy 10 million a month? That 10 million a month is 120 million a year, which is basically the annual supply in total, right?
Right. And I'm saying that that's technically possible, but unlikely that they'll be able to consume that volume for multiple reasons. One is that it's reliant on the fund flow into the Sprott Physical Uranium Trust. So they can't just go out and buy when they're at a discount to NAV, when they haven't raised the cash by issuing shares when they're at a premium to NAV. So that's reliant on that factor. There's also a factor of what's actually available. So we might get to a point where there's such a small amount of supply available, even going a little bit farther out on the delivery curve, that the price skyrockets so much that the pounds purchase are significantly reduced because the price has gone up so much. So at $100 uranium, they're not going to be purchasing 120 million pounds a year. I'm just being very conservative and saying they very, very easily could be purchasing at least the amount of secondary supply that comes into this market, which is 20 to 25 million pounds a year. So looking at that chart again, you'll see that you can basically extrapolate that visual, removing that bottom portion of secondary supply. That's what we're seeing as the offset from the financial players in the market currently. It's absolutely huge. And finally, we're seeing the nuclear fuel consultants, well, at least the primary one, take a little bit more of a serious tone about what's happening here. They put out a weekly, bulletin to their subscribers, which are primarily the nuclear fuel buyers. That's pretty much their main customers, right? And they've been very, very conservative for a very long time, to the criticism of a lot of the investing side that's picked apart their work and said, "Hey guys, you're whistling past the graveyard here, and you got to wake up and tune in your customers about what's about to happen." So they use some language that was like, "We don't really know what the impact is about to be, but we feel that it's pretty safe to say that $30 uranium is not going to be seen again."
Really?
Yeah, they're taking language like that, and that seems obvious to us, right? But it's important because there's a lot of players in the nuclear fuel markets that are just kind of going about their day-to-day business. They're not digging into this stuff as much as the investing side is, and so they've got a date on their calendar when they're supposed to buy uranium. They're not trying to play the market. They're not trying to time the market. They have no incentive whatsoever to do that, because they're working their salaried job, and their job is to procure uranium when their utility needs it, not to buy when it's cheap because it's cheap, expecting it to go higher.
And that's
I know
on
that seems
October
insane.
15th. Is that what you said? That's on October 15th?
What's that?
You said that they all come back to start looking
October
at
1st is the fiscal year.
Okay.
The new fiscal year, when they'll have their annual budgets decided for the elements of the fuel cycle they need to purchase. So needless to say, the financial players are making a big splash, obviously, in the market when it comes to the investing side of things. But finally, the nuclear fuel market is sort of waking up and figuring out what exactly is the play here, in light of a very astute, very well established, powerful financial interest purchasing 10 million pounds in a month, raising $450 million in 4 weeks. It's a big shakeup. And again, we don't know how this is going to play out when it comes to new long-term contracts. I think it's pretty clear that the carry trade is going to be impacted significantly. I don't see how a trader can promise X amount of pounds at X amount of price on a 1, 2, 3 year delivery curve, expecting to profit in this sort of price volatility. So that's probably going to at least temporarily come to a screeching halt. Yeah, it's a different market than it was 6 weeks ago.
So guys, links right there down below in the description and pinned to the comments. It's the first comment pinned. Go ahead and sign up to Uranium Insider, or at least open up the tab and check it out. I'm a paying member. I highly recommend it. Where do we go from here? Let's I think maybe quite a while ago you and I had talked and you were like, it'd be cool if we got $50 uranium sometime in 22, but I don't really know. And then like Sprott comes in and buys 8% of the global or the mine supply in 4 weeks, and all of a sudden it's like, is this like going to go to like $500? Like, what's going to happen? This is like, I mean, I was talking to my mom the other day. Doesn't know much about the uranium market other than what I told her, and I just said, can you think of any market ever that is it's so illiquid and in such a supply deficit where a fund can buy up and corner the market like this? Can you think of any other ones?
No.
Like, no. So where does this go from here?
I think that it's clear that what the financial interests are interested in doing. Sprott has far, far, far more to gain from their equities holdings rising than they do from their management fees of this vehicle. It's really minimal. So they make 1% when they buy uranium, and their management fee is like 0.35%, something like that. It's really minimal. I mean, even with a much larger AUM and higher uranium price, their management fees that they'll be bringing in on an annual basis is something to the tune of 7 to 10 million a year, which is, that's nothing to shake a stick at. But for Sprott, that's pennies. That's just, that's what you find in the couch cushions. So what their whole reasoning for doing this, obviously, is to raise the valuations of their equities holdings. And they're not about to walk away after $50 uranium that they got in a month, and they got 100% pop on their holdings. This is going to be
month, Justin. In 1 month, they doubled the price of uranium.
Yeah. So where do we go from here? In my own reevaluation of this market since this has happened, and yes, I definitely was in the camp of I guarantee we'll see $50+ uranium, and I feel that it will happen sometimes next year, right? So nobody saw this coming this fast. Nobody thought that 10 million pounds purchase would move the price by 50%. It's just nuts. Even the most bullish people in the space, like the Kevin Bambros in the world, were saying 50 to 55 by end of the year, right? And everybody else is like, yeah, right, buddy. But look, it happened in 4 weeks. So my own reassessment at this point is, I think that we're going to be lucky to have the peak of the price spike happen longer than 18 to 24 months. I think this is a much faster market. I think that we will see a price spike. I've thought that all along, ever since kind of the speculation about financial interest eventually will come into the market, that it would create a price spike. And I think that's almost inevitable here. It's likely that we could see a situation where the price spikes, sometime in the 18-month time frame, and then pulls back down to a higher low, settles back into that 55 to 75, range, probably on the higher end of that range. And we continue on with a healthier bull market that's more related to the actual cost of production rather than being squeezed by financial players. However, we have to deal with the hand we're being dealt here. And that hand is, it's out of our control. So we're along for the ride. And I believe that we will see a very high price spike. I don't know how high. Now, will there be more pounds coming to the market at higher price? Potentially, but there's also the argument that sometimes people get, they hold on to an asset more tightly in a rising price environment rather than dish it out more quickly, because they think it's going to go higher. That very well could happen. Are there players that do want to keep this price from spiking out of control? I believe there are. Is there anything they can do about it? We're going to have to see. It's highly unlikely if we see volumes even up. What's that?
No, there's nothing you guys can do about it. Okay.
Yeah. Yeah. I mean, if we continue to see volumes even remotely close to what we saw this past month, then it's going to be very, very difficult to keep a lid on this price movement. So what we're seeing now with the equities and diminishing volume selling, anytime this is super healthy, and we're going to see this 5 more times in the next 2 years. So be ready for it. We're going to see euphoric upward moves where your stocks will double over the course of 3 weeks. And then you're going to see a blow off top and some piece of news pop the bubble. And you're going to see selling, and you're going to see the stocks sell back down 25, 35%. It's exactly what we just saw. It's going to happen over and over and over. And we need to expect it. And if you're adding on those positions, don't buy when people are doing cartwheels and high-fiving in the hallways. Hang on to your positions. If you want to sell and put some money in your pocket, nobody ever went broke from taking profits, go right ahead. But wait for those pullbacks to add, and the market will give them to you most of the time. And that's what it's giving us right now. So I wasn't buying today. Actually, I did buy a little bit today. Monday was a second big down day, and there was a lot of liquidity in the market. So I was buying. That was my heaviest purchasing since July. I added pretty substantially to my holdings there. So these markets, when the market gives you liquidity and selling pressure, that's when you can buy just hand over fist without paying a large spread, a large bid ask spread. And so that's when I do most of my buying, when we see high volume selling, which is what we saw Friday and Monday.
So guys, that's right now. We've had, a minor blow off top, pullback. That's right now. If you haven't gotten in this market yet, or you kind of have, but you don't know what you're doing, you need to sign up for Uranium Insider. The link is in the description and pinned to the comments. I'll give you a second to go pull it open. Open your phone, go in the description, and go to the comments and do that. This is going to be incredible. What are you going to say, Justin?
Yeah. So part of what we do for our members is every Sunday evening and before the Monday market open, I will update the weekly watch list. And what the weekly watch list is a very basic technical assessment of the stocks that we hold and recommend. And it gives some levels to look for on pullbacks. And it's a recommendation of buying these stocks if they hit that whole pullback, or when it's euphoric, a number of them I put on hold, where I recommended don't buy here, just hang on, right? And that was over the past couple of weeks. So this past Sunday, I actually did a video update, and it was about a 15 to 20 minute video where I went thoroughly through all of the stocks. I described exactly what was going on with the Kazatomprom story that came from Bloomberg, and why the market reacted the way they did, and also ended up responding to some of the chatter around Twitter about Cameco. I don't want to get into that right now, but it's just another value add that we're doing for our members that I'm not necessarily going to do that every week, but anytime you see a lot of volatility and the charts just need some deeper interpretation, I'll likely do a video update. So for anybody that's just recently joined or plans to join now, if you look at the previous Sunday's weekly watch list, you'll see a thorough update of our recommended positions and levels to look for. And a lot of those stocks pulled back to almost precisely the levels I had laid out. So that was kind of reaffirming.
So I just want to let anyone know, trying to stop this uranium market, we're coming for you. That's what's happening next. So this is just so exciting. So here's the last question, and then we'll, instead of making this super long, let's have you on again in the next week or so. Started this channel for myself, first of all, because I believe that we're heading into a legendary commodities market, one like the one that made Rick Rule very rich in the early part of his career. And I think we're heading into that again. And uranium was always interesting, but at this point, it's so black and white obvious this is going to be something that a lot of people are going to make fortunes from. And so, we have Justin on a lot because, look, this is pretty incredible what's happening. And I definitely don't want people at the end saying, "Wait, I should have done that." So I'd rather have Justin on a lot than not enough. So I highly recommend you go on the link in the description. Here's another thing I've been thinking about to kind of wrap up, Justin. What's the likelihood that we get mainstream hedge funds and big financial players that start jumping in? I would think if I owned a hedge fund, if I ran a hedge fund, and I could borrow money at 0% interest, and I already found out that some guy, some billionaire in Canada and his company moved the price of a commodity almost 50% in 4 weeks. And they had just on their current ATM another, what, $800 million left or so. And I did the math that the market was in a 70 million pound approximately supply deficit. I would go, oh my gosh, we should get $1 billion and we should jump into this market right now. Even if they only jump into the equities, but especially if they play around a little bit more and you kind of get a tag team party. At the end of the day, we know that right now people are just searching for yield, especially big players. They don't care what they're stepping into. What's the likelihood that we see other big money players that maybe they aren't even from the commodity sector, or they're not regular uranium investors, that are starting to look at this right now and decide to step in? Uh, where do you rate that?
I rate it as a pretty high likelihood. There's a lot of funds that um, the larger funds, they primarily require liquidity. And so for them to enter a market, they're not necessarily looking only for cheap stocks or cheap entries into the market. They're looking for liquidity. That is their primary concern. And so there's plenty of big funds that are on Sprott's Rolodex that they have yet to reach out to, that will be coming into this market when the liquidity allows them to. So they would like to take a position in uranium that would be of a decent size relative to their total assets under management and have minimum liquidity so that they can enter and exit as they please without greatly disrupting the market. So we're not quite there yet. We're still looking at some of the biggest players in the space are still in the $1, $2, $3 billion valuation. To take a $100 million position in these stocks is just far too big and far too risky for some of these larger funds. So once we have a highly liquid vehicle established, which the ETFs are getting there, the Sprott Physical Uranium Trust is getting there, but we're still looking for far more liquidity for these big players to come in. And that's why the valuation argument just really goes out the window, because if you look at the valuations of the individual miners, it's pretty simple to just see, oh, they're already pricing in X amount of uranium as if they were already producing. It's like, yeah, that's true, but that doesn't matter. These markets are 100% all about fund flow. And once we have the Sprott Physical Uranium Trust, the ETFs, the Camecos, the Kazatomproms, the Paladins, once they're up another 50 to 100% in total trading volume and market capitalization, we should see larger funds continue to step into the space. That's kind of the next leg of this thing. And that's especially the next leg if and hopefully when Sprott gets that New York Stock Exchange listing, which in my opinion could have something to do with the slowing down of things that we've seen the past couple of days. I think it was getting too overheated, and we're likely to see, hopefully, a more consistent chugging upward of the price rather than an absolute explosion in the price. It's much more likely that they would be able to convince the SEC that this is a vehicle worthy of New York Stock Exchange listing if it's not completely disrupting this commodity. So hopefully they get that listing, and if they do, then it's pretty much lights out, because then you have 13x the size of market, the New York Stock Exchange versus the TSX, in terms of valuations and total money trading on those exchanges. So that's kind of the next leg. So we're going to see these short-term spikes followed by 20 to 30, 40% corrections over and over and over. And ideally into the next year, when they get that New York Stock Exchange listing, would be probably Q2 is my guess. Then it's really game on. But I think we're going to see this sinusoidal wave of higher high, higher low, higher high, higher low, not only in the price of uranium, but in the equities as well. And right at this very moment, we're in a higher low for both.
Okay, market cap. Tell me if I'm right. The market cap for all the publicly listed uranium companies, is it about 38, 40 million, or I'm sorry, billion? And it went to about 140 billion during the last market. First of all, is that right? Second of all, where do you think this market this overall market can go if the last one was about 140 billion? Tell me if I'm wrong on that too.
No, you're close. Yeah, the last one was about 130 billion at the peak. And we're right about 40 billion. I think we're a little bit under 40 billion with the pullback the past few days, probably in the mid to high 30s. I think that it could overshoot that 130 billion. It could even double that, in my opinion. It really just depends on the time scale of how this plays out. But I think that we could see an absolute frantic, mad rush of capital into the sector in the next 18 months. It's not going to be a straight line, obviously, and we'll have these corrections. But that's what I'm looking at: 18 to 24 months, probably a big price spike. Good to position on the dips, good to take profits when there's high volume buying and everybody is high fiving. And ideally, when we get to that price spike zone, that you're not sitting in full positions and you're not trying to run for the exits when everyone else is. That's one major component of what we're also doing with the newsletter, is having somebody, essentially multiple people, actually watching charts on a daily basis and watching the news of the funds potentially selling uranium and looking for moments of opportunity on the buy side and the sell side, and ideally timing the market as well as we can on that price spike and tipping our members off to that moment.
So this is Justin from Uranium Insider. We're discussing the uranium stocks, the uranium market, the nuclear energy market. I mean, not to mention the other exciting thing is about the only thing in the entire world that both political sides across the spectrum, no matter the country, agree upon, which is nice. You might have a family member that's on one side of the political spectrum. You might be on the other. And hey, you guys could talk about this on Thanksgiving without it being an argument. That's even more reason to be excited. So we want to thank Justin for coming on today. Everyone comment down below, go uranium, go, right there down below. Comment down below, go uranium, go. I want to encourage everyone right now, please do yourself a favor and sign up. The link is in the description right there down below and pinned to the comments. So go down, open up. If you're on mobile, just click the description or hit the comments, and it's pinned to the top, the link to sign up to Uranium Insider. At least give it a read. This is really incredible what's happening right now. And who knows, in 24 months, I might retire from YouTube off of this, and we might be gone. And we want you all to join us on this party, because this is really something incredible, something special. Every day I'm eternally grateful to the people like you that have been in this market for a long time, that have taught us so much about this market. And every day I am so thankful for Eric Sprott and the Sprott company heading in. This is going to be an exciting time. So if you are a uranium investor, give us a comment right there down below. Let us know your favorite stock. Let us know what you're excited about. Let us know in the comments. Let's get everyone fired up in this community. If you haven't yet, copy and paste this link and share it. Go put it on Twitter. Go put it on Facebook. Go put it on blogs. Go share it on Reddit. I mean, what happens if the Wall Street bets crowd starts getting involved in uranium stocks? I mean, what if Dave Portnoy starts? I mean, heck, he's got all that stock in Penn. Hey, we've got a Penn stock in the uranium world. I mean, it'll be good for his brand. He'll have a double Penn. So share this far and wide. If you haven't yet, right there down below is a link for you to sign up to Uranium Insider. If I've missed any important questions, which I'm sure I have, because a lot of you guys know more about uranium than me, let me know in the comments right there down below. We'll be sure to source some of them for our next episode with Justin. Justin, is there anything else that I missed?
No, I don't think so. I think you pretty much nailed it. If you want your listeners here, if they're interested in receiving a sample previous month's newsletter, they can send us an email, support@uraniuminsider.com. We'll send out a sample letter so you can get an idea of the type of content that we put out on a monthly basis. Yeah, it's always a pleasure speaking with you, and I'm super excited as well. I'm loving this dip. I was so happy I was able to add, because I was honestly, it's when you see things rising so fast, it's kind of like it's like a love-hate relationship. It's so nice to see the gains on the screen of your portfolio. At the same time, it's like, damn, knowing where this is likely to go in the next couple of years, it's nice to be able to buy in when they sell off a bit. So I was so happy to see the last couple of days of selling and good volume to be able to add to my position. So
Yeah,
Great opportunities ahead. Yeah.
the problem with it is when it's going up like that, and you look at your portfolio and you have 11 stocks all up 20% in one day, and you're like, I should have sold my arm for some more stock or something to get some extra stocks. So don't let that be you. Right now is the perfect time to be adding. We've just had a nice correction. We know where this is going in the future. Right there down below is a link to join up to Uranium Insider. Smash that like button, subscribe, bell notification to get notified for new videos. Got to make sure you hit that bell notification. Other YouTube will not notify, even if you've already subscribed. So thanks for watching today's episode. We hope that all these videos are helping you out a lot. I know they helped me out a lot. We want to thank you for coming on, Justin. Link in the description, pinned to the comments right there down below. Go ahead and sign up to that, and we will see you next time.